Hello. Thank you for joining our webinar today. My name's Tim Watts. I'm an annuity sales director over here at IAMS. I'm joined by Jake Brunton, senior sales director over here at IAMS, and Nate Self from Gillico. We're super excited to talk to you about the highest first-year fixed rate A-rated carrier, no fee in the market. But before we turn it over to Nate, Jake and I do have a few things to share with you about why agents love working with us over here at IAMS. We'll have a couple of polls as well as opportunities for questions. Definitely encourage your participation in that. And we're actually going to have a prize for whoever has the most participation. So if you can participate in everything, maybe answer a question or two, if we've got two agents, then we'll get something sent out there to you. First thing that I wanted to talk to you about is our best-in-class customer service. One of the ways that we deliver on that is when you call in, you're not going to have to dial by name direct. There's not going to be any voicemails for somebody who might be on a 2-week vacation. You're going to get your call answered by a live person trained up. Sometimes it's me, sometimes it's Jake, sometimes it's Steve Murray, our president. But our goal is to start your experience off with a live person answering those phone calls within 1 to 2 rings at 800-255-5055. Well, I'm going to come back to you here in a couple of slides, but Jake's going to take it away from here.
Thanks for the introduction, Tim. Again, this is Jake, Senior Sales Associate here at IAMS. I'm going to start us off today with our new producer builders. And for those of you who are new to us here at IAMS, these bonuses are available based on your production level in your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see, there are great options for you. There's personal perks for you and even cash rewards available. If you would like to know where you stand towards your new producer builder, or if you would like to have a conversation about how to achieve that next level, please just give us a call, or you can certainly talk with your sales director. Another business builders program that we provide our agents is our referred producer program. I see a couple advisors on with us today that have already taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field, in that one of our best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it worth your while to refer a producer to us. And with that being said, if you do refer a producer to us and they get contracted, we're going to cut you a $50 thank you check. And now where the real money comes in is as your referral rights business, you're going to receive an override on that business. Our ownership team, Charles, Steve, Curtis, and Chris, they sign checks for thousands of dollars every quarter. And with that being said, if you can think of anyone that could benefit from doing business with our team, please don't hesitate to type their information into that questions box, or you can certainly email me or Tim for that information. Below that is our marketing reimbursement program, which is our most popular program that we offer. For every $100K in FIA premium, you're going to get $100 in your marketing reimbursement account. And why this is so popular for our advisors is that we truly do consider this to be your money. You're going to have the flexibility on what services, when, and who you use these funds with. It is your marketing reimbursement. We're not going to tell you what vendors you have to use. We do recommend certain vendors that we partner with and leverage reduced rates and preferred service. We also have our creative team to create a marketing strategy and provide in-house services. If you'd like to know how much is in your marketing reimbursement account or have a conversation about how to utilize it, just give your sales director a call at our office, and we'd love to speak with you about that. Our back office support, it's another way that we're going to add value to your business. This is the core of IAMS and how Charles Hearing founded us years ago in 1986. We want to help the independent advisor work smarter, not harder. We're going to do that with our great business building tools and resources. Of course, advanced case design assistance, life and annuity quotes is an area that we assist with. We're going to get you those illustrations that you request within 24 hours, and I'm going to be completely honest with you. In all reality, you're going to get it much quicker, usually within the hour. Submission to commission support is handled by our new business teams. Mackenzie heads up is on the annuity team, and Michelle's on the life side. They have fantastic teams. They work tirelessly every single day to help you get commission quicker. We're going to scrub your applications, submit them on your behalf, and do the administrative tracking, get you updates on those cases as needed. We do this to ensure that you get commissioned as quickly as possible, and this is a service that we provide to all of our valued producers over here at IMES, and how we can help you grow your business by keeping you in front of clients while our team handles that back office support for you. Our website, also known as our IMES portal, is a great tool for our producers to use and another reason to work with us over here at IMES. Once you're contracted, you're going to have full access to everything that you see on this slide and so much more at imesinc.com. If you haven't registered for the website, it is very simple to do so. When we're done with this call, you can go ahead and create an account. We'd love to see you on there. There's a lot of great resources available to you, including illustration tools, online forums, product grids, and product news, and there's industry updates out there for you as well. Technology is where the industry is going, and Luma is our newest partnership to streamline the application process. Most of our carriers are now on the Luma Firelight eApp platform, so you can go to one site to submit all of your business. It is COVID friendly, and there's some carriers going to eApp only for some of their product lines, and will also offer extra comp for utilizing the eApp platform. Make sure you ask your sales director before you submit a paper app if you can earn more by doing the eApp. We do have a full in-house creative team, and we can help you help your practice, and a lot of the items are turnkey and available out there for you. Many of our sales resources are white labeled, so we can simply impose your contact information and your business logos onto it. Speaking of your logos, agency solutions is our expertise for our team. If you haven't created a full customized brand for you and your agency, we can certainly help out with that. This is going to assist with name recognition, which grows your natural market organically. And then lastly, digital marketing solutions are a very popular topic around here at IMES. We can help you with websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for that information. Make sure that you are accessible and represented in those lanes. It's going to be very beneficial and crucial to growing your practice. Reach out to myself, Tim, or one of our sales directors. Just give us a call when this webinar concludes to talk to them about how you can access our IMES Creative team. We can certainly get that ball rolling for you. And with that being said, I'm going to launch the first poll today. Do you have a comprehensive 2025 marketing strategy that is specific, adaptable, and individualized for your firm? And that poll should be launching right here. And remember, we do have a prize for the top participant today. So yeah, make sure you get that poll answered. Talking about marketing, I'm going to bring up our marketing analysis that we can provide for your practice. We'll take a comprehensive look into how you're currently represented in those online marketing lanes, including your agency brand, your logo, how you're currently marketing, who you currently want to get in front of, and we can certainly put a customizable marketing plan in place. All right, 5 more seconds and I'll close the poll. Thank you for everyone who participated in our first poll of today. There will be 2 more, so make sure you get those answered. Okay, so talking again on our complimentary marketing analysis, for agents looking to explore new sales ideas and programs, whether you're new to the industry or a seasoned producer, this is a free assessment that can help you boost your business with insights on your websites, digital presence, branding, and current marketing activities, as well as recommendations on trusted vendors for everything from lead generation to seminars and social content. You can certainly reach out to your sales director to get started at any time. And with that being said, I'm going to pass the mic back on over to Tim.
Awesome. Thank you, Jake. Well, hey, what we did is we founded IMES Wealth over 6 years ago. They literally just moved into a new building as well. We've grown this division at IMES very organically. We haven't gone out there and bought up a bunch of business. Just been working with the independent advisors and helping them become IARs and pass the Series 65 at a very successful rate. Once we get you registered, we're going to bring great value to your practice with a very competitive fee structure for both you and your clientele. You're also going to enjoy a fantastic technology and investment platform as well. AUM has been a major growth sector for our business and could be a major growth sector for yours as well. Got our Life and Annuity Academy will be hosting our second one that's in person for 2025. This is our third one because we did have a virtual one. Been doing these since about 2017, and we bring a tremendous amount of value with 20 presenters going over top marketing strategies, taking deep dives into limited distribution or top performing products such as Gillico and that huge 10% fixed rate. And then my favorite is our sales strategies, where we teach you advanced ways to position annuity and life insurance as a solutions for more of your clients' needs in pre-retirement and retirement. One that I'm super excited to discuss is IRMA. And if you haven't jumped into IRMA, definitely reach out to Jake or myself once this call concludes, because we'll talk to you about that. We do cover all of your expenses for that Life and Annuity Academy, including your airfare, hotel while you're there, food, entertainment, drinks, opportunity to also network with around 35 to 40 other very successful agents around the nation. If you'd like to learn more about that next Annuity Academy, definitely let Jake and I know. We are in open registration for that, and we'll close that down likely next Monday or Tuesday. I already have dozens of folks who want to come out and see us. So if you're interested, don't hesitate. Just fill out that registration link and let's get you talked to, and let's talk about those plans. We are also in qualification for 2 fantastic producer trips just through IMES. Now, several of our carriers also have additional opportunities for you to travel outside of IMES, but these are both through IMES. Trek to Quebec qualification ends on June 30th of 2025. I think we have over 50 agents, and they'll be able to bring that +1 to a fantastic 4-day trip out to the Fairmont Les Chateaux. We also have our Cap Cana qualification, and that ends December 31st of 2025. So still 8 months to qualify for that one. If you'd like to know where you're at for qualification for either of those, definitely reach out to Jake and myself. We actually have one product line that any production is doubling through now in the end of June 30th. Lastly, if you haven't liked us on Facebook or LinkedIn, this is an easy way for you to stay connected. We send out industry highlights, rate changes, and other pertinent information that's going to be good for you to know. I'm going to go ahead and launch our third poll. While I'm launching that third poll, I believe Jake is going to get the control over to Nate, and that poll is: did you meet your Q1 revenue goal in annuities and life insurance? Hard to think we're already 1 month through the next month of the next quarter. So again, if you haven't answered that poll, we would encourage you to do that. Real quickly, while you're finishing up on that, I'd love to introduce Nate Self. Nate and I actually worked with each other before I came over here to IMES. We've continued to grow our partnership and foundation. And what I can tell you about Nate is he's always the guy that's quick to respond. And literally, most times if I send him an email before I can even get focused on something else, him or his team is reaching out. Great, fantastic, A-rated carrier, limited distribution with Gillico. So I'm super excited to turn the floor over to Nate.
Thank you so much, Tim. Likewise, it's a great relationship that we have with all the sales directors and the leadership at IMES, and we're certainly looking forward to having another successful year like we had last year. And I'd love to introduce some exciting news that we are going to be launching here on Thursday. Good timing with the qualification for your Trek to Quebec trip going through the end of June. We do anticipate rates throughout 2025 to likely come down. There's been a lot of pressure on the Federal Reserve from the American leadership to reduce rates, and so we are hearing from our advisors, and we're seeing on the allocations of our contracts that people want fixed rates. They want certainty in this high volatile time, and that we're going to provide that by a couple hundred basis point lead on our industry competitors here on Thursday, May 1st. So I want to go through today, for those who are not familiar with guarantee, or Couvert. As you see our new logo there that was launched here end of 2024. Our business verticals, what makes Couvert more competitively advantaged in the marketplace to provide more consumer value. We have updated financials I want to release to everybody to make sure you're comfortable in the long-term trust that you're placing into the insurance carrier you work with. We'll walk through our industry-leading Wealth Choice FIA product that's built for both growth and income. And we'll go through the new fixed rates and index guarantees that we're providing. We have a brand new producer bonus program as well for commission enhancements. And then last but not least, your experience for new business. We certainly understand how important that is when you are submitting business. You want to make sure your clients have an overall great experience as well. So Couvert manages business across 4 verticals. The retail insurance side, institutional markets, insurance technologies, as well as asset management or strategic investments. So on the retail insurance side, you have 2 carriers, Guarantee Income Life and United Life. We offer retail annuity and life products to the general American public. The institutional market side, that is our reinsurance. Last year, originating 8.8 billion and having 1.7 billion in flows. We don't reinsure all of our own business, but it's nice to have that source of revenue as well as an ability to help our own retail insurance arm. The next vertical is our insurance solutions. So that's Ignite Partners, and that's our own product developer. So for future products that we launch for the retail insurance business, we are able to do that in-house, which lowers costs that we can then pass on to the consumer for rates. It also generates revenue for the firm. We've built products for other companies, and it's also providing the technology behind the scenes for the portal and so on and so forth. Last but not least, strategic investments. So we have a 12-person dedicated asset management team managing $7.1 billion of our general account. The other $33 billion that make up Couvert is managed by our partner over at Blue Owl Capital, who's an alternative asset manager publicly traded on the New York Stock Exchange. So all of these verticals work together to ultimately provide the consumer the best rates in the marketplace. And we've been growing on a very steady clip. So the Guarantee Income Life side, that's our IMO distribution. So all of our products for Gillico are distributed by our exclusive partners across the country. And we work with only just about 50 IMO partners. So we are a relatively exclusive carrier, founded back in 1926. So we're on our 99th birthday. Always been Guarantee Income Life. And last year, Guarantee Income Life brought in 3.3 billion and the direct premiums. United Life 1.8 billion, so totaling 5.1 billion in premium. So altogether, we're not a small carrier, but we are a mighty carrier as far as consumer value is concerned. And if you look back to when we were acquired 10 years ago, we were a $500 million total asset carrier, now closing in on $10 billion. So we're certainly growing, A- rated. We were upgraded back in 2022. We last year generated on our general account a 7.1% income yield on our portfolio, and we are very positive for the outlook of the firm moving forward based on our structure and our premium growth. So today we'll walk through our flagship product, the Wealth Choice. It is a true growth and income solution. Some different payout examples with our income rider that is completely optional on the product, and some different positioning strategies. So many of you probably know that competing insurance carriers in our industry typically build products for growth or income. Rarely do you find one that is able to be used for both objectives for a consumer. So when this was launched back in 2020, we designed it for the capability to have both. And we were able to do that because we decided it didn't make sense to add a benefit base. So this product does have an income rider, but it does not have a benefit base. The income rider is based always on the account value, and we'll walk through that in a minute. And ultimately what that leads us to is we do not have to hedge that benefit base, so we can put all of our pricing back into the product for growth rates, index rates, fixed rates, as well as payout factors for having the highest actual payout percentages in the marketplace. So on the income side, you have, again, those competitive payout factors. For a 65-year-old, for example, that's a 7% payout. We'll go through that a little bit more in detail in a minute. The client can turn on that income as soon as 30 days after issuance. There is no waiting period outside of the free look. Once the free look period is expired, the client can turn on their income, and it's just going to be that payout times their account value. And as far as cost is concerned, our all-in cost on the product at most is 95 basis points. That's the only possible fee on our product, is if they want that longevity protection via income rider. Now on the growth side, we really wanted to focus on not only providing the client the highest possible S&P point-to-point caps, as well as fixed rates, but we wanted to provide some sustainability as far as renewals, guarantees, and bailouts. So we've added guaranteed strategies to an income-focused product, which is pretty remarkable. We've added a bailout provision to every single client, and we've done a really, really good job as far as pricing the Wealth Choice with a levelized option budget to try to hold our rates as best as possible. So we've had this product out for 5 consecutive years, and we've only had one reduction thus far here just in April. In fact, because of the high volatility this month, the cost of options spiked, and we had to take a very small reduction on business that was 3 years plus old because of the cost of the options. So we really want to provide not only good rates, but consistency of rates as well on the Wealth Choice. Some other features: 10% available right away, so there's no restrictions on that free withdrawal. Even on our bonus version of Wealth Choice, they can take out that 10% free withdrawal right up front. We've built in nursing home and terminal illness waivers on all clients, regardless of age. So anybody that enters a nursing home has full liquidity on their account. The product also has a built-in death benefit enhancement. It's a 10% boost on their account value as long as the policy is taken out in a period certain of 5 years or longer. So we just want to add in these additional features free of charge. So really the only cost on the product is that 95 basis points. That is completely optional. They want that income rider. The income rider is available through the age of 80, and you can exercise it as early as age 50. It's built on the 7 and 10-year chassis, and the only thing the client has to decide is, do you want the income rider? All the other decisions, single or joint, level or increasing payout, when they want to activate, all of those decisions don't have to be made until they actually turn on the rider. So I always recommend, if somebody's on the fence on, do we want to use this annuity for income, definitely add the rider. You can always remove it, and we actually don't assess a rider fee until the end of the year. So it can be removed during the year, and the client doesn't have to commit to it. The beauty of that being on a growth product as well is usually when you purchase an income rider contract, you're really committing to that income. And if things change, whether the client inherits assets, they turn on Social Security, they have an excess income to cover their non-discretionary expenses, you're really kind of stuck in that income product because you've made that commitment long ago. With the Wealth Choice, you don't have to, because of the way it was designed. So as far as how you calculate the income, I think this is a really unique feature, being able to explain only one account value. We hear a lot from our advisor base that they don't like having to explain the account value and then the benefit base being separate, being that's what the income is based off of, but their fee is calculated off the benefit base deducted from their account value. So it's just quite confusing. Only having one account value makes it a lot easier. So all you have to do is you take your account value times the payout factor at time of activation, and that's going to be their income for life. And everything's contractually locked in as soon as it's activated. And again, what we're known for is industry-leading payouts. So 65-year-old is going to be 7%, but even better, 65-year-olds is 7%. We're the only carrier that does not reduce to add a spouse. So if you are working on a scenario, all you would do is you would calculate based on the youngest spouse's age. So 64 and a 65-year-old, it's going to be based on that 64-year-old, be 6.9% for life. So you take 6.9 times their account value, and everything contractually guaranteed. We also have a increasing version of the rider. Again, that does not need to be decided upon until the rider is activated. But the way the increasing works, it's a 3% step up every single year for life. And so if you're used to other competing increasing riders in our industry, most of them are performance based, meaning the index have to perform to get any sort of step up. This one is locked in at 3%, and we've priced it in at 3% because the Federal Reserve's long-term inflation goal is 2%. So we wanted to build an extra 100 basis points to provide that financial peace of mind long-term. So the flexibility I was talking about, the client has many choices. Once they've decided they want that income rider, nothing else has to be decided. So level or increasing, individual or joint payout, they choose when they want to exercise that rider, and it can be removed at any time. So quick example here, Rob is just retiring. He just turned 67, and he's got a 401k. He wants to move a portion over, and he wants to make sure we cover his living expenses of up to $18,000 a year. So we calculate that he needs to bring over $250,000 at a 7.2% payout. That will cover $18,000 guaranteed for the rest of his life, even after the account value hits zero. Now, he also wants to explore adding his spouse, Mary. Mary's 65, so 2 years younger than he is. So all we'll do is we'll calculate it based on his spouse's age 65. So he'll still roll over that 250,000 times by 7%. That's the payout for age 65, and it will pay out both of their lives at 17,500 per year. Anytime you're running a joint income scenario, I highly recommend you give us a look, because we, again, are the only carrier that does not reduce in addition to just providing the payout on the youngest spouse's age. So usually on those early income scenarios, those joint ones, we're going to be ultra competitive for you. I'll quickly want to run through a increasing example. So same clients, Rob 67, Mary 65. We're just going to base it on that increasing payout, which is slightly lower at 4.8%. So it'll be $12,000 per year, but it grows at compounded at 3% every single year for the rest of both of their lives. And even after their account value hits zero, it will still grow at 3%. So we see this used a lot of times, those early 60-year-old cases, right when they could turn on Social Security at age 62, and joint makes a lot of sense for those increasing payouts, because their longevity risk is greatly enhanced on a married couple. As far as where I'm seeing business being positioned in our agents and advisors books of business, these are kind of the four categories that I see index annuities being the most beneficial in a portfolio. Number one, creating a predictable retirement income. That's what annuities are designed for, and where we're the most competitive for providing that predictable retirement income is early income, years 1 and 2, and especially in those joint scenarios, because we do not reduce to add a spouse. We also see a lot of advisors use our Wealth Choice as a bond alternative for a less volatile option. We have fixed rates available. We have trigger strategies available. If interest rates continue to rise, those bond components in their portfolio get hurt, and you certainly don't want to be taking withdrawals from a bond portfolio that has decreased in value. Recover from market losses, fixed rates and bonuses are a great way to do that. And then quick positioning idea, the reduction and sequence of withdrawal risk and return risk is certainly one I like to mention, because the one thing a retiree cannot control is what the market does when they decide to retire, right? And that's the most critical time in the retirement, is those earlier years. If there's losses later in years, there's less of an impact, but those first few years is certainly the most important. So here's a quick example. We've got client Jake, and on the left-hand side, scenario A, both of these scenarios assume a 3% rate of return overall, and Jake wants to take out 7.5% guaranteed for the rest of his life. So he's starting his withdrawal $7,500 a year on a $100,000 investment. Those first 11 years of retirement, he's seeing positive returns, which is phenomenal. So he's able to get to year 15 at age 80, and he still has a balance of $52,801. Now, on the right-hand side, the only thing I did is I flipped the returns. The actual averages are identical, 3% on average per year for 15 years. As you can see, after taking those $7,500 of withdrawals, by year 13, his account balance is completely depleted. And what we can do for him is, instead of taking withdrawals from a retirement portfolio, why don't we just guarantee those withdrawals? Because of payout factors being so high, 65-year-old, we're able to provide him $7,000 guaranteed for the rest of his life. And if he has a spouse age 65, we could also provide his spouse $7,000 for the rest of their life. So taking a few chips off the table, controlling the unknown and the sequence of returns and what the market does when they retire is certainly a benefit of an annuity can provide as far as consumer value. So what's happening in this example? The client is transferring risk to the insurance company. This creates a foundation to help withstand any market losses, and may include additional guarantees, and provides that peace of mind, reducing stress associated with that volatility. Now, what we can also provide is a guarantee year one. There's a lot of uncertainty with the trade environment and the new administration. So we have been seeing at least a 50% allocation to our fixed rate for the year, and we want to be a market leader. So this is a enhanced fixed rate for year one that will go live on May 1st. This is a guaranteed return for the first contract year, and we are offering an 8% rate on our 5-year contract, a 9% on our 7-year, and a 10% on our 10-year. We also have a bonus version that pays a 10% upfront premium bonus. We'll offer a 4% fixed rate. So you'll see on the rate sheet here that grayish row at the top, that is our year one fixed rate. Worst case scenario, it will renew around 2.85%. That's our minimum floor rate. That's a lifetime rate. I do anticipate that rates come down between 3 and 4% year two. So it is a year one offer, but what we do have are some index guarantees. We also have S&P options, and we've had really strong renewal history. So there's a really good opportunity to give them that great return year one, and then look to reallocate once everything kind of settles down in subsequent years. So I want to give you a quick example of a couple ways you can position these really competitive fixed buckets. So here on the screen, you've got two scenarios, a 65-year-old who wants to start immediate income. He's got $1 million. We are accepting business up to $3 million right now with no additional suitability requirements. So $1 million activation on a 65-year-old, that's going to generate them an immediate payout of 7% for life, or $70,000. But what if we are able to wait 1 year? Let's just throw that money into the fixed account, give the client a guaranteed 10% return, and then the subsequent year will turn it on at age 66, and that's going to provide them $75,248 for life. So that's a 7.5% increase in income just by waiting 1 year and utilizing that 10% guaranteed roll-up on the fixed account. We don't have a benefit base, so there's no guaranteed roll-ups, but we do have this really competitive fixed account that you can use just like a roll-up. And on the accumulation side, I just want to show you a quick example of using a 10% fixed rate up front and then reallocating to an 11% guaranteed cap for the remaining 9 years. So you'll see that first year, the interest credited will be $100,000 on $1 million, 10% return. And then it will be rolled into our S&P intraday cap that's guaranteed not to change for the remaining 9 years. That strategy is completely flexible. The client can trade in and out freely of all of our strategies, knowing that our cap rate at 11% will not change. This resulted in a rate of return over 10 years of 8.57% with full downside protection. So a little bit about the intraday TCA index. This is designed by S&P Global. It's the next generation of index strategy because of our high interest rate environment. Carriers are able to be more intuitive with the designs of these indexes. This is an S&P and cash only index. So the way it works is it trades to a 15% volatility up to every 30 minutes between S&P and cash. And it does have the ability to use leverage if volatility is below 15. But on average, the S&P 500 has a volatility around 18 to 19%. So what that means to you is with this having a 15% volatility, the S&P being 18 to 19, the non-cap correlation is approximately 80%. So it's a very highly correlated index to the standard S&P. It's going to provide the client more upside potential. So 11% guaranteed cap. Looking at the returns over the last 10 years, rolling return 10-year 10.41, 5-year 7.66, and a 3-year 6.48%. So it is a really interesting strategy, and the client does not have to commit to it up front. So they can use the fixed rate, they can go standard S&P cap, and they can reallocate to it at any time. I think that's probably the most powerful thing about this index is you can wait to see how the returns are, since it is a rather newer index that was launched in 2023. But keep an eye on the returns, see how it does, and then you can reallocate at any time knowing that cap rate is guaranteed. What we're trying to do here is we're trying to add more certainty to our business. At the end of the day, this is an insurance contract, and clients who are seeking and want that peace of mind want some level of certainty, or the most that they can have with upside potential. So we've done a really good job with our renewal rates with that consistent option budget. We've added guaranteed strategies, the intraday TCA index that I just went through. We've also added a global quality index with Barclays. Both of those strategies are guaranteed for the full term, 5, 7, or 10 years. We've also added those to existing policyholders as well. So if you wrote business with us and they weren't available at the time when you originally wrote the business, you'll see those strategies on anniversary, and they'll be locked in for the remainder of the term. Last but not least, we added a bailout provision, and I'll go back to the rate sheet here. You'll see that bailout underneath the second strategy on the annual point-to-point cap. So for our 7-year product, for example, we've got the 10.75 year one cap and the bailout cap at 6.75. So what that means is if we ever reduce our renewal rate to 6.75%, the client can get out surrender penalty free, fully liquid. The client also does not need to be in that strategy. So if they're in the fixed account or they're in the intraday and we reduce on anniversary the renewal to that bailout level, even if they're not in it, they still can have that liquidity option. So it's just providing the client more certainty that we truly do stand behind our renewal rates. We think that's really important to be able to tell your client confidently that the carrier is pricing the product appropriately, not just for the first few years, but for the full term of the contract. So if you do have business that's already on the books where you've been burned by renewal rate history or a carrier that's did not price their product appropriately, we want to help you. So we do have that 10% premium bonus available to help offset any surrender charges. We have those guaranteed strategies. We have the high fixed account rates to get them back to even. So if you have old variable annuities, old fixed annuities, maybe sold in a lower interest rate environment, or even something that's just out of surrender. Usually when a contract moves out of surrender, the carrier knows it's a liquid asset, so the rates come down pretty dramatically. And last but not least, ineffective income strategies. So lower interest rate environment income riders, we can likely increase their income on a surrender basis. So go through your book of business, look for opportunities where you may be impacted by renewal rates, or you were writing business more than 2 years ago in a lower interest rate environment. There's certainly still an opportunity to help many clients in this elevated environment. And for your efforts, we do have an enhanced compensation program for the full calendar year 2025. This is paid quarterly, all retroactively to $1. Starts at just $1 million of production, regardless of client age. So the wealth choice, we do issue all the way through the age of 90. So on those older clients, we still will aggregate those premiums and provide you additional compensation. So at $1 million, half a point extra on all of your compensation. That's paid directly from us to you, the advisor. 2 million to 3 million is 75 basis points, and 3 million plus is 1% paid retroactively for you. We also are grandfathering folks in, so people that qualified last year are automatically in the same tier this year, and I would anticipate that to be a similar structure next year. So if you qualify here in 2025, just like an airline or a hotel program, you'll be in the same tier for 2026. And we do have a brand new concierge service team that we've partnered with IMES due to our relationship and our contract level. So when you do business with IMES, you have direct access to our concierge service team to ensure you have a phenomenal experience. You also have direct access to myself. You'll see my cell phone email there, my internal Josh Johnson here in Des Moines, his cell phone, as well as his email. Reach out, we're here to help. Go through your book of business, answer any questions you have, and get you all set to write business with Guarantee Income Life. So with that, Tim, I really appreciate you having me this morning, and I'll hand the floor back over to you.
Awesome, Nate. Well, thank you very much for that great presentation. We do have a couple of questions on here. Before we get to that question, I do want to put out my last poll. Again, remember, we're going to send out a gift to the person who's got the most participation, and that is, would you like more information on Gillico's annuities and contracting? So we're going to let that ride for about 30 seconds, and then let's let Nate take the first of the, well, now we're up to 3 questions. We do have plenty of time, so if you've got a question, don't hesitate to throw it out there. So Nate, how quickly can the client turn on the income rider?
Yes, good question. So the rider can be activated as soon as 30 days after issue. So that 30-day period is the free look period. So if the client changes their mind and they no longer want to move forward with the contract, they have the opportunity to free look it. So we just want to wait for that to expire. So we don't allow withdrawals during that free look period. But as soon as that is done, they can activate their income just 30 days after issue.
Gotcha. Would you be able to go to the back-tested results for the TCA? I just want to make sure that everybody saw the 10-year there, but then the other question is, are you able to do a 20-year back test for the TCA, or has that already been done?
So here are the results for the intraday strategy. Let me see. There's a full microsite available on S&P Global's website. So it's, if you just Google S&P Dynamic Intraday Index, it'll bring you to the microsite. I'm going to pull up the fact sheet and see how long their back test goes back. It looks like we can go back a little bit further. Yes. So what I'll do, Tim, is I'll send you the full back tested data. And if anybody's interested in going back even a little bit further, you'll have access to that. The index itself went live August 14th, 2023. It does have a sister index called the Daily Risk Control 15. The difference between the Daily Risk Control 15 and the Dynamic Intraday is that the Dynamic Intraday can trade every 30 minutes, where the Daily Risk Control 15 trades once at the end of the day to that 15% target. The Daily Risk Control Index, let's see, I believe it goes back to 2008 live data. So I can send you the back tested data further on the dynamic intraday, and the daily risk control 15 index. I'm just checking here. It goes back to 2009. So I'll make sure everybody has all of that information. It's certainly important to understand and see as much data to support what you're promoting to your clients.
Absolutely. We can get that sent out with a replay. Nate, if you get that over to us, we'll just send that out so everybody has that all on one spot. Last question here, unless anybody else pops up one more, and that is the sequence of return slide available? I'm assuming that would just be for agent use if it is.
Yes, so we do have that available, and we even have a client-facing piece that talks about sequence of return risk out on our microsite. I'll make sure to get you that flyer. It's our sequence of return flyer, and actually I'll bring it onto the screen here. So if you go to gillico.com and you go to our financial professionals page, this is part of the additional resources in the fixed index annuity section. It's identical to what I shared today. It is a piece that I can send everybody ready to go.
Fantastic. Well, hey, I just want to make sure there wasn't another question that popped up. See, it doesn't look like there is, so we'll go ahead and proceed with the last final wrap-up comments. A couple of things that I just wanted to make sure everybody saw, and that is, this product is going to be very applicable for lots of scenarios, but if you have joint annuitants that are looking to take income immediately or in the first year, I don't see why we wouldn't want to see what that illustration looks like. The payouts are going to be phenomenal. We're not reducing the payout rate based on if it's a joint or a single. And they don't even have to decide if they want a joint or a single at app entry. It's when they go to turn on that income. Extra liquidity available of the 10%. So if you've got scenarios to where we need to be taking out a liquidity in the first year, this product is very friendly to that. And then also, it's not the most limited of distributions, but this isn't a product that I think you're going to run into near as much as others. And when you can provide a limited distribution product with a great history on renewal rates, phenomenal payouts, as well as the industry's highest fixed rate with no fee, I do think that it provides a 1, 2, 3, 4 punch there in a great combination. And again, just to highlight, something does come up, we need, I can actually say that we've had a couple of cases where we needed to get them reprocessed because we wanted the rider and we didn't put it on there, or we put the rider on there and we didn't put it on there. Those aren't fun for the carriers to do. Trust me, they would like to not do those, but Gillico is going to work and make sure that your clients are taken care of. And of course, we want it to be entered in, exactly right the first time. But when those speed bumps do come up, when something happens, they're a fantastic partner. So Nate, I'll turn it over to you for any last thoughts, and then we'll kick it off and get on with the rest of our day. Anything else to add, sir?
I just want to say thank you all for joining. I know it's a busy time of year. Everyone's trying to get their business ramped back up, and it's still a really good time for our business. Last year was a record across the industry, but I think we're still in a very lucrative environment where these products are extremely attractive, and yeah, take advantage of them while you can. The 10% fixed rate, these phenomenal payout percentages, they're the highest I've seen in my 8-9 years in the business. So if you have any questions about what we have to offer, certainly reach out. Our sales desk is available Monday through Friday, 8 a.m. to 5 p.m. Central Time, or reach out to your partners over at IMES, and we would love to earn your business. So thank you, Tim, for having us.
Awesome. On behalf of myself, Jake, and Nate, and everybody else over here at IMES and Gillico, have a fantastic day. Bye now.